Joining us now as our closer today is David Rubenstein. He is the co-founder and chief executive officer of the Carlyle Group and the executive chairman, excuse me. David, it's good to have you on today. How are you doing?
My pleasure to be here. Thank you very much.
There's a lot to talk about. I mean, we might as well start with the market hitting another record high. What do you make of the landscape as you see it? Do stocks deserve to be where they are today?
Well, the market always reflects what people think, so I guess it deserves to be here to some extent. But on the other hand, you have to always worry, can it get any better than this? It's been so wonderful for the last year or so. And I think that all people who buy stocks are always wondering whether this is the market high. But I don't really think it is the high because everything seems to be aligning very well. You have low unemployment, you have low inflation, you have low interest rates. So right now, I think the economy has a way to go. And I mean, stock market has a way to go.
Though you also have this coronavirus, which is grinding the entire Chinese economy to a halt, David.
Yes.
Have you seen any impact on deal making, IPOs, and any of your businesses?
We haven't seen any real impact in the United States yet. Clearly, visits to China are not going to go forward for a while. And clearly, there's going to be some impact on the Chinese economy. I suspect J.P. Morgan is, for example, one firm that says that the Chinese economy will probably grow at only 1% this quarter, the first quarter of the year. And the United States economy probably will take a maybe 0.1% impact from the coronavirus. But right now, I don't think people are that worried about it. We don't know enough about it yet. It's still spreading in some countries. It's in 24 different countries, but only about 400 incidences outside of China. So we don't know how it will spread. Right now, I would say it's not something that people should be unduly alarmed with outside of China. But I do think in China it will have some impact for a quarter or two.
You interviewed the Fed chair not all that long ago. You said on our network not all that long ago as well that you thought he was doing a pretty good job, Jay Powell. Would the market be where it is right now without what the Fed is doing? And how long do you think the Fed should continue to keep interest rates where they are?
Well, I should disclose that Jay Powell did work at my firm for about 8 years, so I have a close relationship with him. I do admire him. I think the Fed, though, generally works by consensus. So I think almost anybody who is chairman of the Fed now would probably be about where Jay is taking the Fed because they do work by consensus. So I think Jay has done a good job. Look, the economy is doing very well, so somebody deserves the credit, and there are many people who would like to take the credit, and many people deserve the credit. But I think the chairman of the Fed deserves some credit. I think interest rates are about where they should be, and so I don't think that interest rates are likely to go much lower. But because of the coronavirus, there is some speculation in the market that at some point this year, maybe by June or so, there could be another cut in the interest rates. But that's just speculation, and the markets may be wrong on that.